Morning, and here are your top 5 stocks to watch out for in trade. Well, let's begin with RIL in the Future Group. The board of Future Enterprises is going to meet tomorrow. This is to finalize the sale of the group's retail business to Reliance Retail. Remember, this is something that has been in the works for quite some time now, and we understand that there's actual fructification and movement in the progress of the deal. So we understand that this is going to be an all-cash deal, and Mukesh Ambani is going to take on Future Group's debt as well as their liabilities and pick up a minority stake in the FMCG arm of Future Retail. Now, according to terms of the deal, this is valued at about 29 to 30,000 crore rupees, and Future Group is going to manage 5 listed units across grocery, apparel, supply chain and the consumer business into Future Enterprises, who currently houses the retail back-end infrastructure. So Future Enterprises is going to hive off all the retail assets, sell them to Reliance Industries as a single unit. This is according to sources, so this is some news to watch out for. HCC, or Hindustan Construction, came out with its earnings, a loss of 390 crore rupees versus a profit last year of 95 crores. Remember, they have been hit hard due to construction activity coming to a complete standstill on account of the lockdown. The income from operations has come in significantly lower at 1,675 crores versus 2,798 crore rupees. And operationally, it's been weak. An EBITDA loss of 60 crores versus an EBITDA of 325 crore rupees. Moving on then to Edelweiss Financial, this was being eyed on the back of numbers, and they have come out with a loss of 245 crores versus a profit of 132 crore rupees last year. This is versus a loss that the company delivered of 2,245 crores on a sequential basis. The net revenues are at 806 crores. The provisions are significantly lower QOQ at 128 crores versus 2,039 crores. The retail credit assets, 55% of the total book. PA Geo-Pacific Atlantic Group is one of the largest focused alternative companies, and they have entered into a strategic agreement with the company where they will be selling a 51% stake. The transaction at a post-money valuation is at 4,400 crores. Meantime, NMDC too in focus on the back of numbers. PAT of 531 crores versus 1178 crore rupees. Revenues have come in at 1937 crores versus 3,263 crores. Margins at 38.9%, and the board has approved the proposal to demerge NMDC iron and steel plant in Chhattisgarh. And GMR Infrastructure to be watched out for. They've announced a strategic restructuring of their business verticals, including a spin-off and the listing of their airport business. They have in fact approved the proposal for this vertical demerger. This is going to see the non-airport business of GMR, which includes energy, urban infrastructure, EPC, demerged into GMR Power, urban and urban infrastructure, which is as a going concern, along with the amalgamation of GMR Power. Meanwhile, that will become a pure play airports company. So restructuring, which they're looking at